Lots of people teach others to trade. But you know what? There's a man who not only taught a bunch of people how to trade, but he taught them so well that they profited around $175 million within 5 years. And yes, he did all of this just because he wanted to prove himself right for an argument he had. I'm talking about the turtle traders here. And in this episode of Legendary Traders, I'm going to tell you about the man behind these turtle traders. And yes, he's someone who turned $400 into multi-million dollars when he was just in his 20s. So, I will get to the point. You're going to learn about the life and career of the legendary trader Richard Dennis. And without any further ado, let's dive in. Born in 1949 in Chicago, Richard was growing up being an introverted boy, but he had a very valuable skill that proved to be very valuable in the future for him. Richard was very good at playing with the odds, and before he could use this skill in trading, he was honing this by playing poker. When Richard was just 17, he took a summer job at the Chicago Mercantile Exchange. This was a time when the concept of pit trading was still there. Traders would shout out their orders, and it was nothing less than an actual bull pit. Richard got so hooked up to that environment that he made the decision of becoming a trader when he was just in his teens. To become a trader on the floor, Richard had to be 21 years old. So he would trade on behalf of his father, but after a brief stint in trading, he went to college and got his degree. Richard graduated with a degree in philosophy from the DePaul University. After he graduated, Richard wasted no time. He got back to trading and wanted to buy a seat at a commodity exchange so that he could trade full-time. His father was against trading and the financial markets entirely. But given Richard's initial success and his determination, he gave Richard a sum of $1,600, out of which $1,200 went towards buying the seat at the exchange, and he was left with just $400 to trade with. Now, I will tell you about this mind-boggling rise. This $400 that he started with became $3,000 by 1970 and over $100,000 by 1973. He profited around $500,000 by 1974, and finally by the end of the year, Richard was a 25-year-old millionaire. Can you even imagine this success? These numbers might not seem too big in 2022, but we are talking about the 90s here. And we are also talking about a boy who was just in his 20s. Legend indeed. Eventually, in the late 1970s, Richard became too big for the exchange he was trading at, and he went on to buy an even more expensive seat at the Chicago Board of Trade, where he would be able to trade even more financial products. In the year 1975, Richard started C&D Commodities along with a partner. And with this, they wanted to move away from the flow to take a bigger names in the industry. Now, even though Richard was trading in the pit, he did not really follow the herd. He has been a man of his own mind right from the beginning, and it worked out so well for him. Traders on the floor usually traded with a short-term approach, and they scalped the market as and when they got the opportunity. But Richard believed that real money was made in surviving the short and medium-term fluctuations and riding the long-term trends. During those times, the markets moved in wild swings, and Richard would enter on weekly and monthly highs and would ride the long trend all the way till the end. The very thing that made Richard different from all the other traders out there is that Richard always thought in terms of the edge. He would think like a casino owner and would capitalize on even the smallest of the edge that he could get. Richard noticed that the traders would themselves dig the grave for them by getting into bad psychology, and to take care of this, he would do everything possible to stay in the right state of mind. His fast growth and skills in trading made him the talk of the town, and people everywhere were in awe of him. But it was something else that got Richard a worldwide recognition. In the 1980s, Richard got into an argument with his then partner William Eckhart on teaching how to trade, and the argument was about nature versus nurture. Richard believed that the skill of trading can be taught, while William believed that it was not a skill that can be taught, but was something that people were born with. To settle this, Richard decided to form a group, and he would teach them how to trade and would give them some capital to trade. This experiment was known as the Turtle Trading Experiment. He put out an ad in the newspaper for this and got around 1,000 applicants, from which he shortlisted just 13 candidates. He taught the group for 2 weeks, where they learned the simple trend-following techniques. They were even taught to cut their losing positions and to pyramid aggressively on their winners. After the training period, the turtles, as Richard called them, were given money to trade, and it is reported that within 5 years, the turtles made a profit of around $175 million. Some of the turtles still trade till now and have went on to become successful figures in trading and financial space. Just imagine that just to settle an argument, you get together a team, teach them to trade, and they mint money. Literally mint money, and that is just mind-blowing. So, what was this magic strategy that turtles were using? At that time, this strategy seemed like some holy grail secret strategy. Well, it was kept a secret for a long time, but when it was released to the public, we got to know that it was a simple trend-following breakout strategy. So, the strategy goes like this. Buy at the breakout of 20-day high with the stop loss at 2 times the ATR value from the entry price. They would then trail the stop loss at the 10 days low and look to ride the entire trend. It would be just the opposite for short trades. Sell at 20-day low, stop loss at 2 times the ATR from the entry, and stop loss trailed at 10 days high. Just at the look of it, this strategy may seem very easy. But there were many more rules that they followed, and each rule was so carefully worked out that it made their system close to perfect. If I go on to talk about the turtle trading strategy here, then this video will go on for too long and you might just skip it. But wait, would you like to know more about the turtle trading strategy? Let me know. I might just make a video on it, and yeah, do not forget to subscribe to the channel. So this was the rise of Richard Dennis and how he became a legendary trader, but there came a time in 1980s that Richard's trading system started facing losses. The way Richard was trading right from the beginning, his account fluctuations would always be huge. One day he could be down big and the other he would be up even bigger. Since Richard was managing outside money and his method of trading was so aggressive, clients could not bear with the wild swings, and they started pulling money out of the fund. By 1984, Richard's fund were down by 50%, and he closed several accounts and returned the money back. Richard said that he just couldn't handle other people's money as they would not be comfortable with how he traded and would have a weak stomach during lean times. It is even said that Richard started getting overly involved in politics that it affected his trading results. But whatever the reason was, and whatever happened, we never deny the fact that Richard did what most people could only dream of. And that's one of the many reasons why he was known as the Prince of the Pit. Now, coming to Richard's personal life. He has always been one of those anti-establishment individuals and was always going against the system. During his peak trading years, he got into politics quite aggressively and would never shy away from voicing his opinions. As a person, Richard was very down to earth and always looked to help those around him. Several of his colleagues said that Richard would spend his off time teaching traders how to trade. Even though Richard had all the money in the world, he never flaunted it and hated when people spoke about his money. His colleagues would buy all sort of materialistic things, but Richard wasn't anything like them. So this has been all about the life and career of the legendary trader Richard Dennis. But is that all? No. I've got some lessons that I jotted down after I learned about Richard, and I want to share it with you. Lesson number 1 is consistency and discipline is the key to the game. Richard was passionate about trading, and he stuck to it all times and showed up day in and day out with the same dedication and enthusiasm. It was this mindset of his that made what he is today and set him apart from others. Now coming to lesson number 2, no one is ever going to be immune to losses. In trading, you will face losses, no matter how big you are. As you saw, even after Richard became a big figure in trading, he did have a time when his systems did not work as good as it did, and he faced losses. So stop thinking that losses are a bad thing and start becoming comfortable with it. And the last lesson is controlling emotions is the key to successful trading. Richard knew that a trader's enemy is their own emotions, their own mind. If they let emotions take control, then it's game over for them. And that is why Richard did everything he could to be in the right mindset and to keep his emotions under control. So here it is. This was the life of legendary trader Richard Dennis. I hope that you actually learned something from this, and if you feel that you did, then do give it a like and also subscribe to this channel if you haven't already. See you in the next video.